Well, hello everyone, Kim here, and I'm actually putting this video today together hour before market close. So, and I really don't think that a whole lot is gonna change in about an hour. Just keep that in mind. Market is still open as I put this video together. You're probably gonna by the time I put this together, upload it, and send it out to you guys. It's probably gonna be you're probably gonna get it after the market close. But anyway, so I'm doing an analysis. Just hour before market close. Obviously today is July 29th, Wednesday, 1 hour before market close. So let's get to it here. I know last time I said I'm gonna make it quick and it went like 40 minutes. Today I really need to make this quick because I am pretty busy. I almost thought I wasn't gonna put this video together, but I just thought I'll just do a quick insight because we did have an interesting move last 3 days here. So let's get to it. We'll look at S&P 500. First things first, and I talk about this all the time. That we must respect primary term uptrend. As long as we're in a primary term uptrend, trend is assumed to be in effect. And all the bears are always asking, why do we not have a straight up flush? Why do we not have just tankage? Well, because we're still in a primary term uptrend. What do you expect? There is higher probability that buyer is going to continue to show up. And so this is a reason why we get declines. I mean, we've been seeing a lot of decline. We've seen a lot of volatility this whole year. This is a year that is frustrating everyone. Right, so you gotta understand what kind of year we're dealing with, and this is a reason why you don't wanna be focused on a short term. You wanna focus on a bigger term. You wanna give some room, give a lot of leniency on your trades because we're dealing with a volatile market. S&P 500 barely moved throughout this whole year. I mean, this was a new year right here. Okay, so I mean, we just pretty much moved sideways all year long, and so here, so one thing I want to talk to you about. Let's just examine minor term, sentiment here, because I mean, I've been covering the long term, and if you've been following my analysis, and so you understand what's going on here. So obviously when we look at S&P 500, everybody talked about this head and shoulder formation, and what I talked when I did my video down here is that we need a full confirmation. The initial confirmation is not enough, and obviously even with an initial confirmation, you can see what happened when we got up. That's the key right there, what happened right here, because what is the definition of a downtrend? Definition of a downtrend is a lower highs and lower lows. Does this seem like a lower lows to you? No. If this thing would have came down, that would have definitely be a lower low, lower highs, lower lows, and that would have been a confirmation, full confirmation of the head and shoulder. Well, that didn't happen. We got up and we put in equal highs, and so now what we're seeing is we have potentially what it looks like inverted head and shoulder. This is kind of what happened. This is very, very important. When we have certain type of formation like a head and shoulder formation, what happens is there might be some kind of a counter attack from the buyers. This happens a lot when we're dealing with the primary term prolonged uptrend, because that's exactly what happened last time. This is what I talked about late last year. You guys remember that we had this monstrous head and shoulder formation. We had a double head, and with the initial confirmation, you see that we had that major topping pattern with the initial confirmation, and then what did nullify or repudiated that pattern? It was that initial invert head and shoulder. That invert head and shoulder with the initial confirmation came down. When we went back, created a higher high, higher lows. That was a full confirmation that repudiated. It lost its strength. It lost its presence. It nullified it. So when we go back here on the spider, and let's look at a more of a smaller scale now. What are we having? We're seeing something happening. Obviously, for this to confirm, we need this thing to get above 212.92 for initial confirmation. So you mean this thing can roll over and whatnot, but as of today, it seems like it's forming something here, right? Because obviously this is equal highs, and that is a higher low. And also keep in mind that this is a 200 SMA that we're finding support at that vicinity. Now we're back above all these moving averages. This is what we call a morning star reversal, and we talked about this in the club yesterday with the members here. Let me just give you guys a little just finding there, right there. So this was obviously this was a chart chart we talked about July 28th. It's yesterday, right? So yesterday we talked about that here at the club with the members, and this is potentially inverted head and shoulder formation with the morning star reversal formation as well. You can see we have a gap down and a doji and the gap up and a follow through, but obviously need confirmation. So we have a morning star reversal along with along with that inverted head and shoulder formation happening in the minor term there, and you can see today we're seeing the follow through. So morning star reversal is confirming. Now what we need to do, because obviously buyers are doing something here, buyers are trying to nullify this pattern there, and then we're trying to continue higher. So now with the morning star reversal happening, now we're getting above 1020 EMA. If we can close today strong, I do believe that it will continue at least gap back up to about 212.79. But the problem is going to occur is that when we get there, are we going to go shoot right up and confirm this inverted head and shoulder, or because we're dealing with this volatile market, are we going to get up, hit the resistance, come back, kind of stir up the bears a little bit more, stir up the bulls a little bit more, and then do a little bit more, do something like this before getting back up? And I wouldn't know. I would only know when I get there and when I start to see certain, certain price action. Something that I've been telling you guys over the years is that do not do your analysis according to the data that is not there. Do your analysis according to data that is already at hand. Tangible data. This is a tangible data here. So, as far as the today is concerned, because of we're back above moving average, minor term I'm bullish, intermediate term I'm bullish to neutral. The reason I'm neutral is I really think I'll start to be bullish if we get above 212.79. So I'm pretty neutral with we're still in a territory of a higher low, so I'm bullish. Primary term, I don't even have to talk about it. We've been bullish for a really, really long time, so let's stick with the primary term bullishness there. Russell 2000, I'll cover this really, really quickly. I know what everybody's thinking right now. Everybody's talking about this head and shoulder formation, but what have we been talking about? Initial confirmation is not enough. We don't even have a confirmation on the Russell. Head and shoulder, didn't work out. Head and shoulder, didn't work out. Another head and shoulder, would it work out? Maybe, but like just trend that we've been seeing, the fashion that this market has been moving, even S&P 500 has been nullified. That head and shoulder nullified. S&P 500 head and shoulder was nullified or is getting nullified right now with that inverted shoulder. So that head and shoulder doesn't scare me much, just because we've been seeing these kind of pattern happening all year long, and it's just never really amount to anything. So right now it is a bit concerning because we made a lower low. However, Spider did the same thing in the past right here. If we just go back, this was, what is that? This was July 8th, right? Isn't that a lower low? Yes, it is. Right? And then what happened? We got up, came back down, and then created higher low, and then we're forming that inverted head and shoulder. So let's go back to Russell. And I still think that Russell is key index for the rest of the year. And Russell, this is a lower low. We're finding support at 200 SMA. 200 SMA, that pink line that you see in this chart, 200 SMA right here, right here, right here, right here, been acting as strong support. So that's where we're finding bounce there and finding some buyers at that level. So what we're looking for is something like this, maybe some kind of an inverted head and shoulder, or this could just go straight up, come back down, go right back up. I'm not sure. As of today though, Russell is signifying bearish sentiment in the minor term, because we do have a downtrend here, and now we're below these moving averages. So in the minor term, Russell 2000 is bearish. We're starting to see some some rotation going on here, because Russell has been leading pretty much the whole year. Russell has always been that kind of bullish sentiment before Spider, but Spider now becoming possibly kind of rotating and trying to kind of catch up to the Russell there. So S&P 500 or the Russell, because now we're below the moving averages, I have to say we're bearish in the minor term. Probably going to have a lot of volatility below this level there. In the intermediate term, we're neutral because we're still holding this pivot level. That is a very, very strong pivot. There's a lot of buyers in this vicinity. There are a lot of sellers back here, and then those sellers became buyers, and that is what it's signifying right now. And so we're finding support there. We did see some kind of a strong hammer candle yesterday. We're seeing that follow through today. So micro level, we might be seeing some bullish run, but minor sentiment though, it is bearish because we're below moving average. Until we get back above 125, 126.23, I think it's going to stay bearish there. But in the minor term, I'm staying neutral. But because we're in a territory of higher low, I'll stay bullish to neutral in the intermediate term, but bullish in the primary term. Let me look at NASDAQ here. NASDAQ's been leading. The Qs are bullish in the minor term, intermediate term, and primary term. Why? Because we're still forming higher highs, higher lows. We're in a minor term uptrend, we're in intermediate term uptrend, we are in primary term uptrend. We had a little bit of pullback, and I'm like, oh my god, this market is pulling back. This market always pulls back. We get a run and we get a pullback. We get a run, we get a pullback. That's the norm. That's what it does. It's not gonna go straight up just because it pulls back a little bit. Yeah, I told you so. The market is pulling back. Of course, it's gonna pull back. Like I get to a point where I see these kind of tweets. I'm just like, just shut up. Oh yeah. It's I said it was gonna. It's been let's not even talk about it. But you can see I threw a Fibonacci here, and then Fibonacci 50% retracement. We're finding some support at that vicinity. It's the level we're also coinciding with that 50 MA. It's a pink dotted line, and then we're now slightly getting above that 10 MA. So you can see this as a bear flag, and then possibly continue lower. But we've seen bear flags that fail. Bear flag really didn't work out well for the NASDAQ last year or so. So I wouldn't put too much weight on that, but it looks more like we can possibly grind higher. I think the problem is we're gonna find some resistance in this gap area, get up, we might come back, and then everybody's gonna call that double top or one, you know what I'm saying? And then we might even do that and continue higher. So again, I wouldn't know how he's gonna react to that, but this is a vicinity of higher low, right? Minor term, that's a vicinity of higher low. We are continue faithfully cultivating higher lows, higher highs in the intermediate term. In a primary term, NASDAQ is bullish, and NASDAQ, and really the NASDAQ, it's now it's shifted because Russell has been the leader, but it looks like the NASDAQ and the financial sector is leading this market. Like you can see, financial sector is now back above 10 EMA. Find support that 50 EMA here. It looks very, very similar to NASDAQ. If I just put out that Fibonacci, you can see just found that support on that 50% retracement. Not only that, we did put in higher high there, higher lows. We're in the minor term bullish uptrend. We're in an intermediate term bullish uptrend. We're in a primary term bullish uptrend on the financial and the NASDAQ. So I think NASDAQ financial is leading. There's a little bit of concerning signal on the Russell, but look at the head that because of the head and shoulder formation. But I've been telling you guys this. We are going to form all kinds of shenanigans without a full confirmation. In this market, we are going to need a full confirmation. Initial confirmation is not enough. Formality alone is not enough. Russell, we have formality, so that is not going to hit. That is not going to scare me at all. And if you're long in the market, that shouldn't scare you either, because you got to understand the sentiment, you got to understand the attitude, the personality that that it is been cultivating this whole year. So, and especially, when you see a topping pattern like that, like head and shoulder on the Russell, you want to see it on the Dow Jones, on a spider, you want to see it on a financial sector, you want to see it on the NASDAQ. If you really think that because of the head and shoulder, the whole market is going to crash it down, you want to see it on every single indices. It must be endorsed from other indices, but we're not seeing that. What we've been seeing is a lot of rotation. We see one index, certain weakness signal, and then other index looking strong. We're seeing that happening all year long, and that is a massive rotation. It is actually protecting each other. Because if we go back in history and study the correction, study the crash, they are condoning each other. They're endorsing. All the indices will have a major topping pattern. We don't have that as of today. I stay bullish. And from what's happening on the S&P 500 today, I am very pleased with what's happening, because that's exactly what I was looking for. And I just looking to see if this thing get above 212, 213, and maybe early next week. If we can do that, hold above that, I believe we can continue higher. But because we're dealing with the volatility market, we may continue in that fashion all year long, and we have to look at that, see how that plays out. So I have to say the market is still bullish. I have to say market is bullish now with the minor term, intermediate term, and primary term. And again, it's because we're dealing with such a volatile market. Obviously, I'm not sure how fast the market is going to. We're probably going to see continuation with the volatility here. So we'll have to analyze it on a weekly basis. So let's look at Apple here. I know Apple, I'm still holding all of my position in Apple. I did not close anything out. We had a big gap down on the earnings report. And then now, you can see that we're kind of moving sideways a bit. Again, I talked about this on last week's video update. I don't want to explain it again. It looks more like, channeling action rather than a topping pattern. And a lot of people want to call this triple top or quadruple top. That is not how. A lot of times when you look at triple or double topping pattern, they form more of a symmetrical fashion. You can see a lot of movement down here and kind of a lot of lethargy, a lot of grinding move. This characteristic is more of a channeling action, and channeling action is actually a good thing for Apple, because what it's doing is it's digesting its gain. It goes up, digests its gain a little bit, and a lot of times it can digest its gain on a pullback, or it can digest on a sideways move. So we had a pretty big move. If you can see this, we had this move here, and so sideways move is not a bad thing. Kind of digest a little bit of its move, kind of let the buyers, let the bulls kind of get some rest, and then kind of get back up here. In the minor term though, let's look at a micro term sentiment here. Obviously we're bearish in a minor term because we're below all these moving averages. There's a lot of fear because of that gap down, and so even the market has been bullish the last 2 days. We just been hanging around doing nothing here. Thankfully though, the 200 SMA did act as support. I wonder if we're finding any kind of support here. No, we don't really have that support, but really though we have horizontal support. You can see all resistance and support happening right there. So what we really need to is, first things first, we need to kind of reclaim all these moving averages first. If we can get moving averages and reclaim those moving averages on Apple, I think then the sentiment of the minor term will change to bullish, and then the last task after that, or next task after that rather, will be to fill this gap, and probably upon filling it, we're probably gonna pull back, but then start to cultivate higher lows and higher highs. If we can do that and kind of get above that, I do believe that we can get to about 150, and I'm being serious, yes. And so and again, I'm not sure how long it's gonna take to get there, but looks like it's, in my opinion, it's holding up well. So I will just continue to hold that, and we'll see what happens next few weeks. Let's look at Tesla here. We'll end the video today. Again, you see we have a double top here. Just because we have double top does not mean that it's gonna just completely roll over. That's a lot of people always look for these signals or these patterns, but I've been telling you that we need a full confirmation. We don't even have any confirmation. We just have a formality. That's it. We have a formation, but we don't have any kind of confirmation. Initial confirmation is getting below that level. Full confirmation will be coming down, going back up, retest as a new resistance, and then roll over. That will be a full confirmation. I don't want to go long at this time. Actually, yeah. I mean, I really wanted this thing to come back down here and then kind of, find a steeper, higher low. You know what I'm saying? Because I think sooner or later we're gonna get that. We're gonna get that steeper, higher low. I mean, we get moved like this, you're gonna get a steeper, higher low. And maybe it might not. I'm not saying nobody truly knows. You could just keep going like that. But I'm talking about in a probability wise. I will feel a little bit better if we get a little bit more steeper decline. But if it doesn't, if it continues higher, then I might just let it go and I might just not chase it after. But obviously it's bullish. We're bullish in minor term. We're bullish in the intermediate term. We're bullish in the primary term. Tesla is bullish as of today. Minor term, I'll say it's neutral to bullish. If we can clear that about 270.62, it was probably bullish, and we'll probably get back up to about 282.28 there. If we can clear above 269.25 and hold above it, a couple of days or so, then you can probably get back up to about 285 there. So there you go, 19 minutes. So hopefully you find these videos helpful. If you have any questions, please use my blog to write comments, or you can email me, because I seldomly check my stock tweets. I check once a week. Twitter, I check maybe once a day or maybe every other day. So if you want to get a more fast response, please use my blog, or you can email me anytime. But have a great day. And we'll look at the market next week. Next week, I'm a bit busy next week on Wednesday, so I'm probably not going to be able to do live. I'm not going to be able to do live event next week, but I'll put out the video next week as well. So have a great night. We'll talk to you guys soon.